Mark Hamrick joins us now. He is the Washington Bureau Chief and Senior Economic Analyst at BankRate. Mark, welcome. So how significant is it that Moody's has downgraded the U.S. credit rating?
Good to see you, Jenna. It doesn't come as a surprise. The three ratings agencies in total have been issuing these warnings in over many years, but it's not a good report card for the fiscal stewardship of the United States budget. In other words, it is essentially a bad grade. And so what it's telling us is that we're getting into a worse position, not a better position. And it can, require some courage on the part of elected officials to not just pass along unfunded tax cuts, to essentially pay our bills in real time and to pay down the debt and deficits that we've already accumulated. It does have the ultimate impact of underscoring that the current situation is not sustainable, and yet here we are on the verge of passing another unfunded tax cut.
So with the U.S. dollar falling, Mark, should Americans anticipate, potentially paying more for imports for traveling abroad?
Well, that's the impact of a currency which is worth less money. And so the question really is, at what level does it essentially bottom out in the near term? If it's merely the kind of modest correction that we've seen lately, I don't think that that is of concern. But, you've heard this idea about sell the U.S., and we've seen that reflected in the rising bond market yield and the devaluing of the U.S. dollar in the marketplace. We have seen a recovery in stock prices. We're grateful for that. But one of the great things about the United States economy and its financial markets is that it has been seen as the most credible, the most vibrant, the strongest in the world. And now international investors are raising whether that is going to be the case going forward.
Yeah. So President Trump's tariffs, they haven't caused a jump in inflation yet. But Mark, if retailers like Walmart and others start passing on some of the price hikes, how soon could families start to feel it?
I think first of all, we should anticipate probably some of this data showing up in the next month or two. We know, for example, that surveys of companies, and these are multiple surveys, indicate that a majority of them plan to pass along the price increases to consumers to some degree. Walmart said that in the last week. Home Depot indicates that it will try to absorb some of the price increases, so it's saying the impacts will be limited, and Amazon is saying it will be more significant. So, we think about the fact, Jenna, you identified, I remember it very vividly several years ago, about inflation being a key issue on the minds of voters. You saw that coming earlier than most, and it was the number one economic issue in last year's presidential campaign. And here we go again with the risk of not only an economic slowdown, but consumers sort of being asked to go to their wallets once again.
Yeah, Mark, do you have fears recession? These tariffs could eventually cause not just the inflation, but recession too.
Well, it's certainly a possibility. I don't think we see the signs of that right now. We're always at risk of a recession. The question is, what is the cause? How long might it be? How severe? The unfortunate thing about this is it will have been essentially self-inflicted. And so to the degree that the administration backs down from the worst case scenarios of the tariffs, that reduces the chances of a recession in the near term, reduces the likelihood that we're going to hit with higher inflation than perhaps might otherwise be the case.
Okay, Mark Hamrick, we are out of time. Mark Hamrick with BankRate. Thank you, Mark. Nice to see you.